Discuss all of the above. Ashley Webster, Liz McDonald, Todd Horwitz, and Shah Galani. I got to start with Apple. I'm going to put myself out there a little bit here. Apple could end today higher. Does anybody want to take me? Todd Horwitz, to you first. You want to take me on this one?
Yes, I do, Stuart. Good morning. You know I want to take you on. I think that Apple, before it closes higher, trades 92. I think it's got more room to go on the downside, and the expected price movement was a 6% move, not a 3% move. I think it's got more work to do on the downside. I think it's going to find that footprint that it put out on August 24th. 92, I'm taking you on right here. I said it does not close higher today.
Okay, you're on videotape taking me on. That's fine, Todd. You'll never be on this show again.
$95 now, Stu.
95. I'm looking bad here. Shah Galani, what do you say? No, wait a minute. Look, Apple made more money in one quarter than any other company in history, and it still sold 74 million iPhones in a 13-week period. You think it might end the day higher?
I still think it's probably the greatest company on the planet. Right. Doesn't matter in terms of the stock, though, because investors are looking at the stock. It hasn't performed well. And frankly, it's a core position, was a core position of ours. We're out of it at higher levels, looking to get back in. It hasn't performed. It didn't perform into the latter part of 2015. So it was just, when a stock doesn't act well like that, that should be actually leading the market, something's wrong. There's probably a little overhead selling there. It's time to get out. I think the stock, I agree, that the stock could see 92, its previous lows. I actually think it could get down. 85.
People pay attention to you, Shah Galani, because you happen to have been right, consistently right. You've not been right on Microsoft yet, but I'll forgive you for that.
He's been right on the Dow.
So you're taking me on. You're saying it won't close higher today, it will close
for the market to go
down.
For this to go higher, the market has to go significantly higher.
Okay, what are you going to say?
It's trading more like a value stock. In other words, what Tim Cook said, and it's important because Wall Street water coolers talk is saying the same thing. It always has a great fourth quarter. You know, a new iPhone comes out, and then the next quarter, which they forecasted, is bad. That's been the history for Apple. It will likely trade to the downside when you see the options trading, and it could pop back up if Tim Cook really assuages Wall Street's fears and says we are transitioning to be more like a services company with all sorts of devices and offerings.
All right, $96 now.
Yeah, very quickly. Look at the Dow. You got Apple and Boeing shaving off just those two companies alone over 70 points right now. Boeing is off 7%.
So that's not such a huge loss, 128 points.
Take those two companies
basically
out.
Apple and Boeing that's dragging them down.
70 points.
Now, about 20-odd minutes ago, we had a super bull on Apple. In about 30 minutes from now, we've found perhaps Apple's greatest hater, the guy who calls the company the dead company walking. He's on the show just after 10 o'clock this morning. We'll bring you both sides on this program. Let's see where Apple actually goes. Now, we're down 130 points now for the Dow Industrials, and Apple has opened at 96. Okay, that's cleared the decks on those two. I want to get to Boeing because that stock is sharply lower. Remember, please, Boeing is a Dow stock. It's down 7%. What's the story, Nicole?
Yeah, this is down about $10 here at 118 and change. So they came out with their quarterly profit. The profit was fine, but it's the guidance going forward. They have to cut the number of jets that they're going to be producing and delivering. They talk about a weak market overall for the aerospace market, and they're coming off a record year for the 747s, for example. They're going to cut that in half for the amount of deliveries. So with that kind of news, the stock gets hit hard and weighs on the Dow Jones Industrial Average to the tune of more than 50 negative Dow points. So, I mean, that is a good chunk of the down arrows this morning.
And it's rare that you find such a huge industrial company down so sharply very, very quickly, just like that. Boeing way down there. All right, Nicole, thank you very much indeed. Let's turn to oil, please. We're going to find out at 10:30 Eastern Time today how much oil we've got in storage. If we've got a whole bunch in storage, in other words, supply goes up, you can expect that the price will fall. We'll see what happens to the price come 10:30 Eastern this morning. Todd, come on in, please. I say that oil is an economic indicator for the global economy. What say you?
I say that oil, in conjunction with all the commodities, are a great indicator of the economy, because what we're seeing right now, because of the glut, because of the economy, because of the manipulation of currencies, we're not getting the drive to use these products, which we're not hiring people. So overall, the jobs that we've created are not very good, which is keeping the oil and the production down, which is causing a major drawdown on this entire economy, which is why the central banks around the world keep having to step in and manipulate their currencies to try to overcome what they have done with everything else.
All right, Shah, oil, a negative economic indicator for the global economy.
Not only is oil an economic indicator, it is the benchmark indicator right now of the global economy. It speaks to both the demand side in terms of weakening demand for oil. That says it's, global growth is not accelerating, it's decelerating. And on the supply side, we've got so much oversupply of oil. We know that the capex that went into the oil field, oil patch, all that production, that money is gone. It's not going to be, there's no more spending to be done on that. And then you have the overlay of the companies that may go bankrupt. You have the overlay of the banks that loan to those companies. You have all of the high yield debt that they floated. That's in a lot of investors' pockets right now. A lot of worries that are weighing heavily on the market.
I've been cheering on for